For this special live, I really want to bring to your attention a couple of things that are not being noticed, at least not for those that are really trying to look out, if you ask me, the small business owner, the self-employed. Before I get rolling, I'm going to walk through a number of things, but I want you to note that in the body of this video, I am putting links to what it is that I am going to go over with you. So you're going to find the link to the actual HR bill. Don't go to sleep here now. Don't be going to sleep just because I'm going to now talk about HR bills, okay? Because we're talking about $84 million according to a Congress Select Committee, and $76 billion. Maybe I said million. Let me be sure. I'm talking billion with a B. 84 billion potential left in PPP. 76 billion potential based on the analysis done by the New York Times. But I've given you a link to that HR bill, what I'm getting ready to talk about. I'm giving you a link to the New York Times article, as well as the Congress Select Subcommittee related to this. I'm also going to talk about the ERTC, the Employee Retention Tax Credit. Big question about, do owners and spouses qualify? So in the body of this, I give you the code section and a brief answer related to that you can look back on. And also, I'm giving you a link to my Employee Retention Tax Credit seminar that you don't want to miss. So what is this all about? What this is about is that for PPP, the Paycheck Protection Program, yes, it ended May 31st. Yes, it was reported by the SBA there are no funds left, as in the funds were all loaned out. That's true. I believe the SBA. But here's what the reality is that there are many that got the PPP loan, but they're going to have to pay it back. They either got too much with all the confusion in the beginning, or they didn't actually qualify for it, so they're having to give the money back, or they're having to repay it. There's going to be money going back into PPP. And more seriously, dollar amount that has been pegged is due to the fraud that has been committed related to the Paycheck Protection Program. And that's where this 84 billion comes from, the 76 billion, depending on kind of what the estimates are. It does need to get recovered, but rest assured, I want you to think of it like this. If you had your own bank account and you chose to help people in your area, and you decided that you were going to set aside $10,000, and you had a set of criteria that if people met the qualifications, you would give them some money. Now, all the money's left your bank account. You've given all the $10,000 back. But now when you're going to double check, well, did they do what they said they were going to do? Did they actually qualify? And if you found that a couple of those that received the money didn't qualify, whether it's fraudulent or not, you would be getting that money back, or they would have to pay it back. And therefore, very easily, sometime after you depleted your funds to those that you gave out, as I'm giving you a parallel to what's going on here with PPP, you may find that you would have $1,000 put back into that account that you were giving money out to. And you most likely would go, well, I earmarked $10,000. I was planning on giving out $10,000. So now that I got $1,000 back, well, maybe I should find some other businesses that qualify that didn't get any of the $10,000. And who are they? And let's give them the money. Where everybody goes to sleep is that when we talk about bills, and we talk about HR 3684, and we talk about the Senate passed a bill, and then we think politics, and we think Republicans and Democrats and president, and all kind of names come to mind. And guess what? That's us taking the eye off the ball. What we need to look at here is that in the bill that has passed the Senate, HR 3684, it indicates in section 9007, subsection D as in dog, G as in golf, and I've given you a link, and I've specifically have listed this in the body of this video, but it indicates that PPP And that program is permanently rescinded, and any unobligated funds in the PPP program will be no longer available for PPP purposes. So let me bring it back to this example that I was telling you about. If you gave out $10,000, you found that there were a few that didn't qualify or they had to pay it back, and you got that $1,000 back. Well, if you and your partner, let's say, decided as you were getting that money back or about to get the money back or repaid, if you and your partner, let's say, said, you know what, I think we're just going to end this program. We're not going to find anybody else. So let's just end the program. We're going to close it down. Therefore, you would get the $1,000, right? You'd get it back, and then you would go and use it for other purposes. And that's what this Senate bill lays out. And it's been passed by 67 senators, so this isn't a political bill, if you will. 67 senators is basically bipartisan. And when we look at this, and we look at the language, and I get it's legal language, and then we want to go to sleep. But when we look at the legal language of this, what it's indicating is that it's ending PPP. And you may think, well, JJ, why do we care if they end PPP if they gave all the money back? And what I want to rest assured you really kind of grasp here is that there's more money coming back. There's going to be money coming back into the Paycheck Protection Program. Repayment or fraud, and therefore money that needs to be recouped. So when I'm talking about this, it's not far-fetched to think that money that could come back to the Paycheck Protection Program would be then re-given out, if you will. And the reason that I know that that is how it would work is that that is how it worked back in 2020. When they passed the PPP, March 27th of 2020, that money was gone within about 12 business days. So then later in April, more money was put into the Paycheck Protection Program. The Paycheck Protection Program in 2020 ended on August 8th of 2020. And guess what? There was money left. It hadn't been all loaned out. There was money left. And the U.S. Secretary Treasury at the time followed the rules that have been around since the beginning of this great United States that we are in, which is when the government earmarks money for a certain program, it is forever earmarked for that program until the government ends the program. So HR 3684, this Senate bill that's already passed the House, that already passed the Senate, it's up for a vote in the U.S. Senate on or before September 27th. It clearly states that PPP is over. Any unobligated funds are no longer earmarked for PPP, which makes it clear that any money coming back to the Paycheck Protection Program will not now be available for those that would qualify otherwise. What it means is that whatever money would be coming back into this program, Congress has to do this, but whatever money comes back into this program no longer is for the program, and it's then for other purposes. Why is it important, at least from my vantage point, why is it important that we would still want the Paycheck Protection Program funds to be available to those in need? Well, let's just start with the self-employed, those that file a Schedule C or a Schedule F. Now, in 2020, those filers, the self-employed, only got the Paycheck Protection Program based on the net income. In the beginning of March of 2021, when we were now going through the second draw, as they call it, in 2021, in early March, the law was changed that those that file Schedule C or Schedule F could get PPP based on their gross income, which is line 7 of Schedule C. It's an obvious that that would yield more PPP, because if you're getting Paycheck Protection Program funds loan as a self-employed, and you previously got it based on your net income, and you now could get it based on your gross income, line 7, it's an obvious that you would get more. The problem is that because we were at the beginning of March and the program was extended but ending May 31st of this year, the applicants that had previously got PPP in 2021 were unable to go and reapply. They were not able to then go back to the SBA and say, well, I'd like to apply under the new calculation because I got PPP based on my net. I'd now like to get it based on the gross and get the difference. But that was not the case. And most likely it was also due to the fact that PPP was running out. And in fact, I believe that the funds ran out before the technical end date of May 31st. So for the self-employed Schedule C and Schedule F filer, these are our smallest business owners. These are the ones that are the future of businesses, right? Most small businesses start out small. Most small businesses start out as a Schedule C or a Schedule F, even if they're a single member LLC. That's where the new ideas are born, and when somebody's really getting their business off the ground, they're filing typically a Schedule C. Or there are many, many, many small employers, self-employed, filing a Schedule C that either didn't have the resources at the time or didn't know about it, that didn't get PPP at all. So there's a big push at the end of PPP to ensure that those that potentially were missing out previously were able to get it. And there were some special programs set up to help that specific group of employers get the last of PPP. And you know that not all those that needed it got it. The other key here is that not just, well, let's more support our self-employed, because we want to support them as well as small business owners that have employees. But let me continue on the self-employed for just a moment. The self-employed without any employees, the maximum PPP that they get is $20,833. How is that figure brought about? Well, PPP, whether based on the gross income or based on the net income, when you're calculating, well, how much PPP do they get? Well, there's a calculation. It's taking your net income, or later your gross income, divided by 12 months, multiplied by a factor of 2.5. But when you start the calculation, you can only put a max $100,000 at the beginning of this calculation. Meaning if your net income or even your gross income is above $100,000, well, the most that you get to include in the beginning of this calculation is $100,000. And when you then take 100,000 divided by 12 times 2.5, that arrives at that number I told you of $20,833. So that is the max that a self-employed person is able to get out of PPP, not having any other employees. So when you think about this, the self-employed that got PPP throughout 2020 and when the program, I know it was around in January and February and March. Of course, it didn't really launch until the beginning of February. But for those self-employed that got it in 2020 and all the way up until the early part of March that got it based on their net, there had to be a vast majority of self-employed individuals that didn't even get the max $20,833. Off the top of my head, I don't remember the average amount, but I do remember it being well less than $10,000 that a Schedule C, Schedule F filer got for PPP under the calculation that was based on the net income. There's more of a fighting chance. Thank you, Cindy. And I noticed somebody else gave, starts with an S. Thank you so much for that. I really appreciate it. Honored. But when you look at those that were then able to apply using the gross income, most likely there was a lot more that got near the average of $20,833, or the max that is. So now let's look at this, and I'm going to run my calculator here for a second. But if you have $84 billion, and let's just say for grins, that only would go to the self-employed. Now, I'm not saying that at all, because if they keep PPP around, meaning if any money comes back into the PPP program and they decide how it's dispersed, well, who knows what the new qualifications would be, additional qualifications, would it only be this? So you got to remember, I'm speculating here only if they got more money and decided to then give it to the self-employed and the small business owners. But if I were to take 84 billion, I better make sure I got enough zeros behind this. So 84 billion, okay, divided by, and let's just say that the average self-employed person got maybe, let's just even say $9,000, right? So that would be somewhat, yeah, that would be another 9 million and, 9,333,000. But another 9 million self-employed individuals that could get potentially another $10,000 of PPP. Now, I don't know about you. I was a self-employed individual when I opened my practice back in 1997. I was a Schedule C the first year that I filed. And I will tell you this, I started my own practice May 15th of 1997, and I had a loss on Schedule C. Why? Well, it was my first year, right? I didn't have a full year's worth of income. I was also starting a business, so I had upfront costs. Now, obviously PPP wasn't around when I started my practice all the way back before the turn of the century. But if it was, I would have gotten nothing, because I would have had a loss. And so there's plenty of self-employed individuals that didn't get any of the PPP because they had a loss. And when it was determined you got PPP based on your net, well, if you have a loss, you got none. So what I'm saying is 9 million self-employeds could get potentially another $10,000. Now, again, I'm using speculative information. It is the U.S., let me make sure I get it right. It is the U.S., and I've got a link to it, it's the U.S. House Select Subcommittee on the Coronavirus Crisis. I'm giving you a link to their report, and their report at the time was 84 billion. It's being reported that it's even more now, but that's an official report I can get my hands on to share with you when we're talking about these amounts. New York Times is putting it at 15% of PPP loans were fraudulent. That's how they're coming up with their 76 billion. That doesn't even include the amounts that would be having to be paid back. So I know that last year I did some phone consultations related to PPP, helping people directly. And there were a number of phone consultations that I had, and it was clear that they inadvertently got too much. And they weren't going to have enough payroll. How could that happen? Pretty easily. Because we know that, especially in 2020, the PPP was based on the payroll in 2019. Most small businesses, if not all of them, don't have the same payroll in the next tax year. So very easily, somebody could have just inadvertently got too much, and therefore they're going to have to pay some of it back. There were those that initially got PPP based on what they paid to self-employed individuals, which is not correct. Doesn't mean they committed fraud. They filed it based on what they thought. The bank obviously thought that was the case, but they will have to pay those dollars back. They're going to be funds not fraudulently taken, but having to be repaid to PPP, and that number's not even included in this 84 billion that is a part of the U.S. House Select Committee on Coronavirus Crisis report. So when we're talking about now small employers, right? What would be a small employer? We probably all could have different definitions, but right now, the Small Business Administration, the SBA, is in essence saying that a small employer's 10 employees or less. And I come to that conclusion because when you look at the SBA's supplemental targeted grant, it is only for those that have 10 or less employees. Now, I wish that I had the statistic on the tip of my tongue to tell you the number of small businesses out there that have 10 or less employees. But I know this, it's millions and millions of small businesses that have less than 10 employees. In my practice, besides myself, I'm an employee, I have 3 employees. Most of my businesses that I work with, my clients, have 10 or less employees. Only a handful of them have more than that. When you're talking about a business of that size, that revenue, if you will, the costs that they have, more PPP can really be the difference of keeping employees employed and keeping employees on the payroll, if you will, to be able to continue the business. Now, why would PPP be important to have in the future, right? Are we completely out of this? I'm not sure. Who knows, right? If I'm not being political, but we just look at the numbers, I know some don't believe in any numbers that you're seeing, but we have to go with some kind of number, right? But if you just look at the numbers, pick your stats, wherever you want to look for them. But here's what you would have to admit is that there are people with COVID, unless you just literally don't believe it's a real anything, but there are people with COVID. There are people dying from COVID, right? So we could get cynical here, and you may want to turn it off right now, and I would encourage you not to, because I'm not talking about that. What I'm talking about is that there is now an economic effect out of this, whether you want to call it a full reality or media hype, but there's a reality here of a business effect, okay? The reality is that I don't know that we go into the times that we had last year where it was a full shutdown. I know many states treat things differently. Many municipalities treat things differently, but you have to know there's an economic effect going on right now. And potentially more to come, right? I hope not. I mean, the reality is I hope that we don't need PPP. I would love it if we could be in a set of circumstances where we wouldn't have to worry about this. I've been practicing for 28 years, and I've never been in these circumstances, and guess what? Neither have you, where we are literally concerned about a worldwide, nationwide, statewide, citywide, pick whatever you'd like, pandemic that is affecting business. So right now, what's interesting, and I'd like to talk a little bit about the employee retention tax credit. So don't go to sleep to me on this, because I'm telling you this, so many people are missing this credit. I'm not going to go into the calculation because I have lots of videos on that. I don't wish to, thank you, Chris. I don't wish to put you to sleep, but I would really love it if you just listen a little longer if you're just tuning in for a minute. But this same bill that I've referenced earlier related to PPP and it rescinding the program, therefore not allowing any monies coming back into it, either from fraud, recollections, or just simply repayment, that bill removes PPP, and therefore any monies that come back into it won't be for stimulus PPP purposes. But this same bill in section 9007, subsection D and G, that's what is related to the PPP. But then in section 80604, and you don't have to remember it, it may not be relevant. I'm not trying to put you to sleep on that. Thank you with flying colors. And thank you so much for, again, Jim, I probably mispronounced that. But in the body of this video, I've listed it. I've given you a link to this bill. I've given you exactly what sections we're talking about here. But in this same bill, it ends in the employee retention tax credit September 30th of this year. Right now, the current law is that the employee retention tax credit lasts until the end of this year, to the end of December, so December 31st. So this bill, again, has passed the Senate. 67 senators have voted for it. It's passed. You could call it a bipartisan bill. By it ending the employee retention tax credit, it's been estimated in news reports that it would save, in essence, the government a little over $8 billion with a B. Now, that's a lot of money, especially for small business owners. The employee retention tax credit, I hope you're familiar with it. You got to check out some other videos. And if you don't mind, I'm just going to tell you, I've got a seminar that you can get instant access to covering the employee retention tax credit. But that credit that is so missed is $7,000 per employee. Now that's the maximum amount, but per employee. If you qualify in fourth quarter of 2021 and you have 10 employees, and yes, if each were to make $10,000, you would have a tax credit of $70,000. Now let's say you go, well, JJ, I don't pay my employees $10,000 a quarter. Well, that's only about $3,333 roughly a month. That's employees that are making about 40 grand. It's not a far-fetched number that employees could make more than $10,000 in a quarter. But let's say you're an employer and you don't have anybody even making that much. But let's say you have 20 employees and you qualify in fourth quarter. And let's just say that each one of those employees makes, somewhere around $1,750 a month, something to that effect. I mean, you might be looking at a $70,000 tax credit with 20 employees. You can run your own math. Another way to look at it is this. What's your payroll in a quarter? Multiply that by 70%. Is that a number that's important to you? Is that an amount that could help you? I'm assuming the answer is yes. When you're talking about the employee retention tax credit, here's the thing. It's actually the easiest of the stimulus to qualify for, probably next to just the stimulus checks that were mailed out to individuals. Now, I understand with PPP, we got to where we could just put a few numbers on an application, give it to the bank, and money was able to be given out. I understand with the economic injury disaster loan and those grants, it was a 5-minute application. So yeah, no disrespect, but if you think it's too much work to spend a couple hours calculating this to get 7 grand on one employee, 14 grand, 20 grand. I had, just as a side note, I want to talk a little bit more about the employee retention tax credit. I'll do it in 2 minutes because I don't want to bore you, because this is all very important. We don't want PPP to end. We want the monies that come back into PPP to continue to be available for small business owners and the self-employed. This bill that's passed the Senate ends it. We don't want that. We want the money that comes back in to be able to be used to help small businesses that have employees as well as the self-employed. We don't want the employee retention tax credit to end a quarter early. We don't want it to end September 30th, when right now it's in place till the end of this year. And this Senate bill ends employee retention tax credit September 30. The employee retention tax credit, when I say it's one of the easiest to qualify for, in 2021, you take your quarter of gross receipts for your business. And those gross receipts are whatever tax basis you're on. For most of us, it's cash basis. So you take your gross receipts in 2021, and I want to make sure you hear me here correctly, but you compare then those gross receipts to the same quarter in 2019. Make sure you hear that correctly. You're not comparing 2021 to 2020. 2020 was down for a lot of businesses. It would probably be hard in 2021 to do worse than 2020. But you are comparing your gross receipts, which can only take 30 seconds. I don't even know how it takes 30 seconds. You should be able to pull and go, what were my gross receipts in this quarter of 2021? What were my gross receipts in the same quarter in 2019? Really not possible. You don't know what your gross receipts are in 2019. You know what they are. You compare them. If 2021 is down by 20%, are you ready for this? If you have 500 or less employees, all of the payroll for the entire quarter, for all of your employees, with some minor exceptions, but really all of your employees, bonuses, paid time off, right, gets included in the credit. So it's not far-fetched to think, well, maybe a business has $100,000 a quarter in payroll, right? They have 30 employees. That's a $70,000 tax credit for 1 quarter. So if they do away with the employee retention tax credit in fourth quarter 2021, that's a huge hit financially or potentially with the stimulus. And let me be clear, that was the only qualification. That was the only qualification. You do not need to be a restaurant. You do not need to also be shut down. You do not need to also be affected by a governmental order. You do not need to be a certain employer. It doesn't matter if you're an essential business or a non-essential business. If your gross receipts are down and you're 500 or less employees, all of the payroll for the quarter is included in this credit. It's being missed. It is being passed over. Quick story, I had someone months ago, John, who left me a voicemail and said, I don't know who you are, but I came across your video at 5:30 a.m. It's the first one I ever watched. And in that video, you told me about the employee retention tax credit, but more importantly, what you told me was, if your financial or tax advisor hasn't told you about it yet, go and ask them. Or if your tax advisor has said you don't qualify, go and ask them why. Get the answer why. Not just, well, you're an essential business or whatever the case is. But John, listening to my video and leaving the voicemail, indicated that he did already, before watching my video, go to his tax advisors and they said, you don't qualify. But then after watching my video, he went back to the tax advisors and said, hey, real quick, can you just tell me why? That tax advisor called back and said, wow, we apologize, you do qualify. Do you know what their credit was in first quarter of 2021? It was $410,000, ladies and gentlemen. $410,000 for 1 quarter. Now, clearly, this is a bigger company with more payroll. But you know, the average client of mine that has 10 or less employees typically is going to have a credit for 1 quarter that's going to be somewhere around $25,000. So if you have 10 or less employees, ask yourself, is $25,000 a significant number to you? Heck, is $10,000 a significant number to you? 5,000, right? If your gross receipts are down, you qualify. Now, yes, if you have a governmental shutdown or partial shutdown, or your business has been affected directly by a governmental order, that's another way you qualify for the employee retention tax credit. But hear me, and hear me clearly. To get this employee retention tax credit, which is up to $7,000 per employee per quarter in 2021, it's an either or. Your gross receipts down by 20%, or was your business affected by a governmental order? It's not both. And if you, I'm going to repeat myself, but if you have gross receipts down by 20%, it's the only qualification. It's the only qualification to now get you that credit. If you have more than 500 employees, which is not many, probably tuning into my channel, but if you have more than 500 employees, you still qualify. There are some differences on what qualifies, but I don't want to go through them because it just muddies the waters. But you looking and going, what were my gross receipts in third quarter 2021? What were my gross receipts in third quarter 2019? Guess what? Please hear this one too, because this one will blow your socks off. Okay? If you look at that and you go, shoot, I don't qualify. Now, first of all, you don't want to be down, right? As a small business owner, you don't want to be down, right? You want to make what you're supposed to make. But let's just say when you're looking at the credit, you go third quarter 2021 compared to third quarter 2019. There are no comparisons to 2020. You compare that and you go, I'm not down. I'm not down. Check it out. So don't go to sleep just because I'm getting ready to tell you that IRS Notice 2021 dash, 49, I believe it is. It's in a number of my videos, okay? If it's not 49, it's 43. Go to my other videos. It's irrelevant on the IRS notice number, but here's what that IRS notice number says that just came out 2 weeks ago. Are you ready for this? So if you look at third quarter and you're not down enough to qualify, there's an alternative method that's available for every single quarter in 2021. And it's different than the alternative method that there was in 2020, and it's easier. Because check this out. To determine if you qualify for third quarter of 2021, you also can look at second quarter 2021 compared to second quarter 2019. And if that's down by 20%, at least 20%, you qualify in third quarter. What that means is if you're down in second quarter, you qualify for third quarter. And guess what? You qualified for second quarter as well, because if second quarter's down, you qualify for that quarter, and that then qualifies you for third quarter. Here's the thing, as the law stands right now, and HR Bill 3684 makes it go away for fourth quarter, but the law right now is it exists through fourth quarter. Which means this, if your fourth quarter is down at least 20% in 2021 versus the same quarter in 19, right? Fourth quarter 2019. If it's down 20%, you qualify. Now, if your gross receipts are down in third quarter, you also would qualify for fourth quarter. I understand that might be a little confusing, so take my seminar. It's pretty inexpensive. And if you don't want to take my seminar, I've got to have at least 25 videos covering this. Point is, this bill makes it go away. This isn't a political video at all, because this is about preserving the stimulus that the government, that Congress already approved. Congress, the government signed into law, whether it's last year and this year. Okay? That stimulus is there and is available. This bill takes it away. On the ERTC, takes it away for fourth quarter, and for PPP, what it takes away is any monies flowing back into PPP from repayments of PPP loans, and any monies flowing back into PPP because of fraud. That money then is sitting there. Again, I've given you a link for those that have popped on in the body of this. I've given you a link to the HR Bill 3684. Don't snooze on it. It's really important that we focus in on not letting this in. I give you a link to the U.S. House Select Subcommittee on the coronavirus that identifies 84 billion just in fraud. 84 billion with a B. That means that 84 billion would be coming back into PPP at some point, that program. New York Times has it at 15% fraudulent PPP loans, which puts 76 billion, according to their analysis. It's a billion. I mean, even if it's a billion, right? Or 2 billion or 5 billion, even if you're like, well, JJ, 84 billion seems like a lot. 76 billion seems like a lot. $1 billion is a lot. Am I right? $1 billion is a lot. How many small businesses, self-employed individuals could be helped with $1 billion, right? The employee retention tax credit costs you, small business owner, employers, $8 billion with a B, just not having it in fourth quarter. That's a lot of money. And again, if we were in full recovery mode, I wouldn't be doing this video. If we were in a mode of no concerns, that we were past this pandemic in every way, and we didn't have an outlook that most likely includes a business effect, I wouldn't be here telling you we need to save stimulus. I wouldn't be here telling you, oh, we should probably make sure that the employee retention tax credit remains alive in the fourth quarter. I wouldn't be telling you, hey, we need to keep money in PPP to loan out, in essence, give small business owners and the self-employed. Why? Why wouldn't I want to do that if things were going well? Because I'm a small business owner just like you. I'm an American citizen just like you. And here's the deal. We weren't born in this country for handouts. None of you want a handout. We've been getting them because we've needed them because of what's going on. And we're thankful for them. But none of us got out of school and said, where's my stimulus checks? Where's my EIDL loan? Where's my PPP? Where's my family and sick leave credit? Where's my employee retention tax credit, y'all? We didn't do that. When you started your business, you did not go, wait a second, before I get rolling, where's my EIDL? Where are all these programs? As a small business owner and as the American spirit, regardless of what side of the aisle you are on, we want to self-preserve, we want to self-protect. Typically, most everybody wants to pull up their own bootstraps. Most small business owners didn't get into business thinking that this could ever happen and therefore they would need this stimulus. We're still looking at that. We're still looking at a business effect, an economic effect because of what's going on. When we're looking at right now, and I'm going to tell you how this right here could qualify you for the employee retention tax credit. But when we're looking at a municipality or a city or a county or a state, okay, now I want you to hear me as we're talking about stimulus. I don't want you to hear me as though I'm talking about the pandemic, coronavirus. Is it real? Is it not real? I'm not talking Democrats or Republicans or independents or any political figure that gets you seeing red. Here's what I want you to hear. There is a reality. Google it if you're not sure what I'm talking about. There's a reality that businesses are being required to have any customer coming into that business show a vaccination card or a negative test for COVID. Regardless of what you think of that, it's a reality that it's happening. Good, bad, or indifferent. Maybe that's good, maybe it's bad. I'm not commenting on that. What I'm just simply telling you is that there are municipalities right now, any business, and that's required. There are other areas that it's medical facilities, let's say, that are requiring that. Or that might be that it's going to a concert venue or going to restaurants. We know that there are cities and states that are requiring restaurants that they can't serve anybody in their restaurant without proof of a vaccination card or a negative COVID test. Now, the thing to note there is, it's a reality, but the second thing to note is that that governmental order, now it needs to be an order, not the business deciding to do it, not a suggestion by the government. What I'm talking about is that now limits that business from getting just any customers in it. That's enough of a governmental order that can qualify you for the employee retention tax credit, even if your gross receipts are up. Because remember, the employee retention tax credit, you can qualify it two different ways. Is your gross receipts down? Yes, you qualify. They don't, they're not down. Well, did you have a governmental order that truly affected the commerce of your business? Yes. Well, then you qualify for that period of time that the order was put into play. Now, you're going to have to talk to your own tax advisors as it relates to this, because I'm sure that if there's a restaurant that has that requirement, but then they have a huge outdoor seating that's not required for. I mean, there's lots of little exceptions to all that. But what I'm saying is that's enough to qualify for the employee retention tax credit. And why is that so important for me to mention in this? Because in this HR bill 3684 that's already passed the Senate, 67 senators voted for it. So it's a passed bill. 67 senators, you can call it bipartisan, not political. But it ends the employee retention tax credit for fourth quarter. Well, fourth quarter, obviously it's still an unknown here, right? The fourth quarter, when are we hitting fourth quarter, y'all? Well, today, during this live, it's September 1st, so we're like 29 days away after midnight tonight, right? We're in fourth quarter. Well, in fourth quarter, there could be an increase of municipalities or local governments, state governments, that would require this. Therefore, there would be more businesses that would qualify for the employee retention tax credit. Here's why also, when we talk about unemployment and unemployment benefits, we know that the unemployment benefits, regardless of how you feel about it, they are coming to an end here in the next week and a half. Okay, they're coming to an end. Don't see anywhere in any discussions up in DC about extending the federal unemployment. Maybe they should, maybe they shouldn't. That's not what I'm commenting to you about. What I'm commenting about is that what it looks as though is that there's not going to be any federal unemployment benefits, talking federal now, not state, going into fourth quarter of 2021. So if there are businesses that aren't able to make as much money and they have to lay off employees, if there's no PPP, they can't continue to pay that employee, right? And that's what this Senate bill ends as PPP, any potential for future PPP. Well, if there's no PPP, then that employer doesn't have an opportunity, if they qualified, if they made PPP available again, out of this $84 billion that the U.S. House Select Subcommittee has identified alone just with fraud monies that would be coming back to PPP, let alone we're going to have monies going back to PPP from repayment. But if there's nothing available, meaning the PPP program has been shut down, thank you, Pam, I appreciate it. If that PPP program has been shut down, then that employer's got to, I feel terrible, but I'm not going to be able to continue to pay you. I don't have enough business coming in the door. And then with no federal unemployment, right, that employee then doesn't have a job, is going to rely on state unemployment benefits, better than nothing. But the federal unemployment obviously did add a buffer. The federal unemployment also helped the self-employed. But nonetheless, we don't then have the safety net. And then guess what else? This bill, HR 3684, ends the employee retention tax credit September 30. So we don't even have a tax credit in fourth quarter that would benefit employers that kept paying their employees. So in fourth quarter, we literally wouldn't have anything to prop up, for lack of a better word, the small business owner, the self-employed. And where are we going to be? And here's the thing, I'm not even talking about that we are trying to have Congress create stimulus, okay? I'm not here to tell you that we need to create stimulus, meaning that's not what this video is about. There is already stimulus identified. And by the way, it was this year, this administration, this Congress that's in 2021 that existed, came into power, if you will, in 2021, that extended the employee retention tax credit to the end of the year, which is huge. The law that passed last year, the Appropriations Act that passed on December 27th of 2020, brought the employee retention tax credit, as I explained to you, and all the provisions, but it ended June 30. And then I think rightfully and great, because as a tax professional, it helps my clients, but it was extended to the end of the year. And I believe it was extended in March. So in March of 2021, they said, hey, we're going to go ahead and let the employee retention tax credit be all the way till the end of the year. So this is stimulus that's already on the books. I just want it to remain. PPP, this is money that the government already voted on last year. And they voted on at the end of the year, right? Saying, here's funds to help self-employed and small business employers. Here's funds. We're going to earmark this much money, right? It's already been earmarked. So they're going to get some of this money back. HR 3684, this Senate bill that's already passed, says we're permanently rescinding any unobligated funds in the Paycheck Protection Program. What does that mean? Well, money that comes back in is unobligated to anybody. And if the PPP program has not just ended, but been rescinded, and it says rescinded permanently, then those funds can't be used for future purposes. The other thing I would tell you is this. When you're looking at the fact of the matter of like, well, you know, JJ, it's 84 billion, sounds like a high number. Well, I mean, it was a trillion with a T for the PPP program in essence, when you add all three, the original, the add-in in 2020, and then what they did this year. We're talking basically a trillion, $1 trillion. So 84 billion, 76 billion, right? Technically, I'm not sure who did the math in the New York Times, because 76 billion of their number isn't actually 15%, but I really enjoyed the New York Times article nonetheless of what they laid out from the facts related to this. But 84 billion is, when you look at almost a trillion, that's less than 10%. That's an easy number to think would be coming back in. That's an easy number to think. And even if we go with the argument of, well, you know, it's fraud, JJ, and the Ferraris have already been bought, the vacations were already taken, so that money's not coming back in. Well, the Ferraris can be sold. Yes, a vacation can't be refunded, but real estate bought or money sitting there is going to come back in. Okay, there is going to be money coming back in. But let's now just say, okay, the U.S. House Select Subcommittee on the coronavirus crisis estimated 84 billion of fraud. Let's just say that they're really off, and it's only 10% of that. That's 8 billion. That's still 8 billion with a B dollars that could be for PPP, meaning it is not unrealistic. Now, here's the last thing I'll tell you as it relates to the reality of HR 3684, that we need to ask our Congress people to strike, if they like everything else in the bill, that they would strike these two sections in HR 3684 and not end the PPP program, not permanently rescind it, not indicate that the unobligated funds cannot be used for PPP. Just strike it. That's section 9007, subsection D and G. And in the body of this video, I've given you a link to that subcommittee report. I've given you a link to the New York Times article. I've given you a link to this U.S. bill, and I've listed for you the sections to look at. We don't want this bill to end the employee retention tax credit September 30, which is just striking the section. These aren't even big sections, right? I mean, I could cross these out in about, 8 seconds. But section 80604, as I indicate in the body of this video, we don't want that in HR 3684. So it would be easy, okay, to ask your congressperson to go, hey, real quick, can you get your pen out? And let's just go to that section. Can we just put some lines through that? And then down here, can we just put a few lines through that? I don't know about the rest of the bill. I've not analyzed the rest of the bill because I'm not paying attention to anything really other than what's affecting my clients, and what's affecting my clients right now is what's going on economically. And what's helping my clients right now has been PPP, has been ERTC, of course, the EIDL and the grants. I want that to be. So when I'm talking with clients, the clients that I'm talking to on a daily basis in the trenches, I'm in the trenches with, none of them are hop, skipping, and jumping like, oh man, we're just having the best ever year and I got zero concerns, right? And I'm talking about small business owners that have 10 or less employees. I'm talking about small business owners and the self-employed that if they're gone for 30 days out of their business, they could be bankrupt in 90 days, right? Any small business can be bankrupt in 90 days. Any small business, right? Traditionally, any small business. How? This is where I want there to be a reality. I don't want to scare you that, oh, we're looking at bankruptcies, but let's be honest here when we're talking about small business owners, and let's walk out reality here. The reality is that if a business is shut down for 4 weeks, no money comes in the door, okay? And now they open back up. Well, during the month of shutdown, what did they have, right? Payroll, rent, utilities, right? Had to make payments on bills, right? There's going to be those costs. So they're already behind. Where are they going to come up with that money? Right? Probably going to have to borrow it. Do they have the ability to borrow it? Do they have the money actually sitting there? Most small business owners and self-employed, if you're really being honest and you're really looking at a true cash balance, you're not fooling yourself and saying, well, what do I deposit in a month? Who cares what you deposit in a month? How much money do you have on average every single day in your business account? And most, it's enough to cover about 3 more weeks of expenses. Meaning if there was no more money coming in the door, the money that's on the books on average would cover 3 more weeks. It'd probably cover 1 to 2 more payrolls and 1 maybe month worth of rent. So maybe 3 to 4 weeks. So we have money not coming in. Doesn't mean now we're going straight to bankruptcy, but employees probably can't get paid in the month following when they reopen. Let's just say, I'll say, well, JJ, we're not going to shut down again, right? Well, could have a partial, or we could have where you have to have a card or something to that effect to be able to get in. So I digress just to say that a small business that is damaged financially for even just 4 weeks, how long does it take for them to recover? You know what it is? Literally 2.5 years for a business, if you just run the numbers out, for them to recover from just being shut down 4 weeks. That's the same statistic when you're looking at a self-employed individual. So where's that money come from? Right? Small business owners that are staring down their employees, don't want them to go without. What do a lot of small business owners do? They go into their personal savings. Small business owners go into their retirement accounts. They borrow to the hilt, meaning they borrow whatever it is that they can. Why? Because they love their employees. They want to keep helping their customers. They want to honor their commitments to their vendors. Small business owners want to continue going as is. And I don't know about you, but most small business owners, the employers, also are superheroes. And what does that mean? Right? The small business owner, right, to everybody else, well, they got plenty of money, right? They can do without, right? Small business owners like, yeah, you're right, I can. That's most likely never a reality. We're not superheroes. You're not a superhero, right? Being a little facetious. So in fourth quarter, maybe it's not a full shutdown, but if fourth quarter's down, going into the next year, we don't have unemployment, whether you believe in it or not. There is not going to be any federal unemployment. We don't have PPP that could potentially help. And now we don't have the employee retention tax credit. I feel like it's a recipe for a huge small business blow going into 2022, 2023. And what did I just say earlier? 2.5 years for a small business to recover from that. Let me close with this, and thank you so much for joining me. And I will do a summary here at the end for those that maybe just popped on, but I want you to do me a favor, because I've been paying attention to this. Amanda and I have been looking and really paying attention, and just look in a 1 mile radius of where you live or where you work, or maybe even just the route that you take to go to and from dropping the kids off at whatever, or your work or customers or vendors. Take a look around, just what's in your neighborhood, your backyard, if you will, 1 mile radius. How many for lease signs do you see on business storefronts? How many signs do you see for sale? Not talking house, I'm talking businesses. And it is staggering and it is concerning that every shopping center that I look at, and I'm here in Oklahoma, and I'm in a city that we've been doing pretty good for a long time, just steady is the pace. But when I look at a brand new shopping center that I could probably hit a golf ball 6 times and be there, right? So maybe 2 par 5s. But if I'm looking at that shopping center that's brand new, it was high end, and it was packed full, it was full, and 70% of it is vacant now. 70% of it is vacant. And guess what? You know what those 70% of those businesses are? They were the local businesses. The businesses still there are the 2 restaurants that are both regional chains and a pharmacy. When I go to the other corner over here, Amanda and I went and had breakfast the other day. Literally 50% of it is vacant, all for lease signs. On and on. When you look at that, businesses have already shut down. We already are down, right? Man down, woman down, small business down. We're already down. We can't go down anymore. Again, I told you earlier, we're not looking for new stimulus. That's not what this video is about. This isn't a plea to Congress, give us more PPP. This is a plea to Congress as the U.S. House to not approve H.R. 3684 line item ending PPP, in essence rescinding permanently the program, which means that any monies coming back into it can't be used for stimulus. They already earmarked it. Money coming back in should continue to be earmarked for it, right? Then, if we are looking at the employee retention tax credit, it's already on the books. It already exists through the end of the year. This is not a plea with Congress to say, hey, will you keep it into play one more quarter? This is to say to Congress, the U.S. House that's supposed to vote on this H.R. bill, the U.S. Senate has already passed, 67 senators passed it, it's bipartisan. But when the House looks at it, they need to strike these two sections that I've listed in the body of this video. Strike Section 9007, which permanently rescinds and ends PPP, and strike Section 80604, which ends the employee retention tax credit a full quarter early. So when we're looking at fourth quarter in 29 days from now, what's it look like for you? What's your average cash in the bank right now? I'm going to tell you personally, Amanda and I had a discussion yesterday about our personal finances, about the business finances. I'm going to tell you this right now. We had a few very small one-night getaways. We've canceled them. We've had a few other things that are coming up, and I was like, you know what? I don't think we're going to do that. I had a purchase that I was going to make that was, not a major purchase, maybe an almost major purpose. I was just going to borrow the money to do it, but I'm not doing it. I met with my son earlier today, who's in his freshman year of college. And I said, when we get to next year, you're going to probably need to do this because I want to make sure that we're really paying attention. And we've already been talking about 2022. I'm already cash flowing. So my challenge to you is that, and I've put language in the body of this video that you can easily copy and paste. Just tweet and tag your one congressperson. How would you find them? Google U.S. House, click on it. You put in your zip, it pulls up who your congressperson is. You'll see the little birdie, click on it. You can copy and paste what's just in the body of this video that is very simple and says, please do not end PPP, strike this section. You can also do the same thing by saying strike this section to your congressperson to not end ERTC early. You can do it on Facebook. I'll tell you what would be more, and I'm going to tell you the power of you doing this, okay? The power of this is phenomenal. But if you were to email your congressperson or all the congresspersons in your area or state, we only have 5 in my state, so I communicate to all 5. We only have 2 senators in everybody's state. If you were to email them or fax them or call them, you can technically telegraph them. I don't know how you do that, but or tweeted and just tagged them. Believe it or not, you represent thousands and thousands of constituents, because how many constituents do that? Not that many. And why? Because we don't think that our voice really is that amplified. We just, it's just this one person. So if you're doing it respectfully, guess what? You could probably find different statistics depending on where you look. But one phone call, one email, one fax, the congressional office, the senator's office, on average, see that as 7,000 constituents believing the same thing or requesting the same thing. 7,000. Now, I don't know the statistic on a tweet. Maybe it's 2,500, but it's a lot. It's not just one request. It's not just one voice that's saying, hey, don't end this or don't permanently rescind it. You represent thousands. And again, we're not asking for new stimulus. We are not asking for new stimulus. What we're asking for is that the stimulus that's earmarked in PPP remain. That future unobligated funds coming back to PPP remain. They remain available for the same purposes. We're asking that ERTC simply not end early. See what I'm saying? We're not asking for them to go find money. We're not asking for handouts. We're asking them to just simply, will you keep on the books what you already have put on there? So on the employee retention tax credit, I've covered it quite a bit. I have a ton of videos related to that. Don't miss it. But in fourth quarter, $7,000, up to $7,000 per employee is the credit that would be lost in fourth quarter. If your receipts are down by at least 20% in fourth quarter 2021 compared to fourth quarter 2019, or your gross receipts are down at least 20% in third quarter 2021 compared to third quarter 2019, either one of those things qualifies you for fourth quarter employee retention tax credit. If you're 500 or less employees, all of your payroll for the quarter qualifies for the employee retention tax credit. Raises, bonuses. Now, the only thing that doesn't get included would be tips that restaurants collect from customers that are not cash. I have a good video on that. I got a seminar on it. I got a link to a seminar if you want to look at that. And then the big question that came out of the ERTC that was resolved with the most recent IRS notice 2021-49 is that for owners and spouses, do they qualify for the employee retention tax credit? Yes and no. If they are 50% or less owners combined constructively, they qualify. Now, a husband that owns a business 50%, a spouse that owns a business 50%, under Code Section 267C4, you can't go to sleep because this is what it's based on. Collectively, that spouse and both spouses, both partners that are marital, are 100% owners, so they don't qualify, except, check this out, under Code Section 267C4, and I've given you the language to it, in the body of this video, is that if you are in a position where you don't have specific heirs, you may qualify for it. So, it's a very specific question that you need to ask. It has been very recently further resolved, as in the last couple of weeks. So it's huge. You really should check out the Employee Retention Tax Credit Seminar that you can get instant access to. I think it's a 174-page PDF, 4-hour seminar. And I did 3.5 hours of Q&A. The Q&A is public. Wow, S. Phillips, thank you so much. I really, really, really appreciate that. So what can you do? Thanks for tuning in. What can you do? Contact your congressperson and simply state, don't allow PPP to end. Don't allow ERTC to end early. That should be enough for them, but if you can just mention HR 3684, if you can mention the line items so they know specifically, that would help tremendously. If you already got PPP, if you don't qualify for ERTC because you don't have employees, look around though. Where do you go buy donuts in the morning? Where do you get your smoothie or shake? Where do you go and get an ice cold drink on your way home at the gas station or whatever? Where do you get your pizza from or that great hamburger from? These are from small business owners. These are small business owners that could use that. You want to keep getting those burgers that you like and the donuts that are convenient with that wonderful drive-through right on the way to drop off the kiddos or get to the office. You want those businesses to stay in play? Then ask Congress to not end this. Wow, we had a lot more people tune in. We have averaged well over 100 at any time, which is phenomenal. I appreciate the thumbs up, 71. I have only been able to see those wonderful people that have given some dollars, which is so appreciated. I really, really appreciate that so much. All right, here's the deal. Go to the body of this video. Talk about this. Let's save this. Let's keep it on the books. All right, hey, if you've made it to here, or you tuned in, or I kept you interested for a little while and you're not a subscriber, I'd love to have you as a subscriber. Just click it. And thank you to everyone, as I'm now over 75,000 subscribers. Never would have imagined it in a million years, because I'm a practicing CPA, certified public accountant. Never in a million years did I would think I'd have a YouTube. But the reason that I love this channel and I love doing it is because of the community that this has built. And for all of you that are on regularly, or as often as you can, or tuning in at least once a month or every once in a while, and the support that you provide with a thumbs up or a comment when I allow videos to have comments, or the emails, or following on other social mediums that we have. I really appreciate that, and I feel like we've built a community together. I'm going to go kumbaya on you for a second. I feel like we've built a community together to do this, what we're doing right now. Help out our fellow citizen. Help out our fellow small business owners. Help out our fellow self-employed. Even if you're not self-employed yourself, even if you're not a business owner yourself, you know one. You rely on one. You probably work for one. We need this. And you're here to help. And so I really, really appreciate it. All right. We got to end it like I always do. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Y'all have a great night and have a wonderful Labor Day weekend. And be safe.